Hey everyone, so for those of you that are new to this channel, my name is Seth, and what I do with this channel is basically I record my trading session every day. I basically trade treasury futures. So I record the whole session, analyze what I think is going to happen. At the end, I review how well I'm doing. I'm not necessarily like a stellar trader or anything like that. I'm actually right now just barely above break even, trying to do a combine. So take it for what it's worth, I would like to be really open about everything. And of course, if you want to talk to me, we post a Discord link in every video so you can come into our Discord and talk to me. But I see a lot of news stories out there sometimes that I feel like, are kind of down my alley. And there's a lot of misinformation out there, or just, information that people could really use that it seems like the larger population doesn't seem to understand. And one of those stories that we saw today was that the CME has announced that they are attempting to create a Bitcoin future. So when I looked at the Bitcoin subreddit, there was all sorts of, people didn't quite understand what it's going to mean. There was a lot of people saying, oh, this is really bad, or this is really good. And what I want to do is I want to help you understand what a future is and what are, the market forces that are affected by this decision. I mean, the thing is, obviously I trade treasuries, so I have my own biases, right? And I can be a little blunt too. I know that that's not always the most persuasive way of doing things, but I feel like it's the most informative way of doing things. So what I'm going to do is I'm just going to give you the information that you need so that you can make your own conclusions about how this will actually affect Bitcoin. Fair enough? Fair. Okay. So I made a little presentation here. I'm going to try and go through this really quickly because I know that you don't want to sit through like, an hour video, right? All right, so what is a futures contract? Well, a futures contract is an agreement to make a transaction at a specified future time. And that specified futures time is called the settlement date, right? Now, there's two types of settlement. There's physical delivery and there's cash settlement. And this is kind of an important distinction because the proposed future for Bitcoin is going to be cash settlement. So what is the difference between those? What does that mean? How does it work? Right? Well, physical delivery is basically you're saying that on the settlement date, if you're selling, you're agreeing to provide or deliver, some physical commodity. In this case, I have a picture of an oil barrel here, right? And the buyer is agreeing to receive that commodity, right? So there's going to be a transaction on the settlement date. This guy is going to give you oil. This guy is going to give him money. Okay, you could actually have oil physically delivered to your house if you really wanted it set up that way. It's possible. I've heard weird stories, right? This is, kind of the more commonly understood method of a future. This is usually the one that everybody talks about, and a lot of the futures on the exchange, they are physical delivery. So, yeah. But there's also many of them, kind of like the E-mini, probably the most popular one, they're cash delivery. So what does that mean? Cash delivery. So basically with cash delivery, there's some sort of index. Let me drink with some water here. Excuse me. Okay, so with cash delivery, there's usually some sort of index. And when the settlement date comes, you make or lose money based on where you entered your position and what the spot price is on that index at the time. Okay, so let's say that it's this new Bitcoin future. You buy at $6,500 and on the settlement date, it's $7,000. Well, you made $500. So, that $500 would be deposited into your account. So here in this picture, I have, here are the people that lost money. Everybody that bought above, the spot price and sold below this spot price, they all lost money. So they're all going to have money withdrawn from their account. And then these people, the people that bought below the spot price, sold above the spot price, they made money. They'll have money deposited into their account. So why is this important? Well, this is kind of the enforcement mechanism, right? Because it's based on the index, I know that I can buy and sell that future based on what the underlying asset is actually going to do, which in this case is actual Bitcoins being traded on Bitcoin exchanges. Okay. And because of that, there is an incentive for market makers to keep those two things in line, essentially, right? So here I have an example of arbitrage. So if there is a price discrepancy between what is in the future and what is in the Bitcoin exchanges, then people can do an arbitrage. They can basically go long the physical and they can sell short the future. And then they could hold that until the settlement date. And basically any price movement that would be made, between then and the settlement date would be canceled out between these two, right? Anything that she made from going long Bitcoin would, be canceled out by being short the future. And you would basically make the $10. And that kind of means that, the physical price is going to tend to go up to equalize out, and the price of this is going to tend to go down to equalize out, right? Vice versa, if, this was 64.90, then, it would be the opposite of this. People would want to go long the future and short the physical. But the point is that arbitrage, and it depends obviously on the number of market makers in the market, but usually those roles fill up pretty fast and the market tends to be pretty efficient because it's easy money for them if you have the technology and the speed and the access to do it. I shouldn't say easy money. I'm going to say safe money for them, right? It's a very high probability trade with a small consistent profit. Okay, so let's go into what are some of the possible effects from this. So when you're thinking about the market, and especially when it comes to trading, short-term trading and futures trading, it really comes down to what is the balance between buyers and sellers, right? There's basically this game going on between buyers and sellers, and at any given time, one of them may have an advantage. And if the buyers have an advantage, then the price is going to go up. And if the sellers have the advantage, price is going to go down. So we want to look at how would this change affect the balance of buyers and sellers in the Bitcoin markets right now. All right. So the first one is that, in my opinion, it creates a lot more speculation out there about Bitcoin itself, right? So there's a lot of people out there, like maybe institutions that might want to be exposed to Bitcoin. They might want to speculate on Bitcoin long or short, and they can't right now. And if this future comes out, then they'll be able to, okay? But another key here is that this does not actually increase the user base of Bitcoin, right? Because it's not physical delivery. People aren't getting Bitcoins. So the number of people out there that actually own Bitcoins and are using it does not increase from this change, right? So there's more speculation, but not more users. I think that's a really key thing to keep in mind, right? More speculation is not necessarily good, okay? It does mean that you're going to have more opportunities to get the price that you want. It does mean that the price can be, you can trust the price more because you're not going to get as much of a, as large of a price discrepancy, because if there's a really large price discrepancy between what it is now and what it should be, there's a lot more people out there with the incentive to push it down to where it should be. But on the other hand, instruments with a lot of speculation also move around a lot, which isn't necessarily something that you want in a currency. So, a good example of something with a lot of speculation, again, is oil. Obviously, there's the oil companies that trade this, but there's a ton of retail traders. It's just a really good instrument for speculation. And so oil moves around a lot. I've seen it move $1 just like that. $1,000. Nothing. Okay. Another big thing is that this increases the visibility, right? So whenever there's a news story about Bitcoin, it goes up. I think most Bitcoin traders are familiar with that, right? And this kind of does the same thing. Now, keep in mind though, with this increased visibility, this is not a for sure thing yet, right? The regulators still have to approve it. I actually think there's a pretty good chance that they won't approve it. And if that happens, there are going to be a lot of disappointed people. So I know that a lot of people were buying today based on, the CME story, that if it doesn't happen, it's, that there could be a short-term decrease in price as, things equalize back to what they were. Okay. The next thing is that you have to think about what kind of trader trades on the CME. Okay. And what's going to happen is you're going to have a lot more market makers that are going to come into the market that are much more sophisticated market makers, right? So you're going to have a lot of people that are going to be doing hedging and arbitrage. And you also have a lot of people that they're just really experienced market makers, right? There's people that have been trading, back when it was open outcry. And so if you're a market maker in Bitcoin today, you're going to have a lot more competition. Now, understand, not everybody and their dog is going to be able to trade this. There are margin requirements. Margin requirements is generally based on how far could something move in a day. So you can go to the CME website and they describe how they determine these using their span rules. But if you look at Bitcoin, like a really big day in Bitcoin right now is like 15%. So if you look at 15% based on current price, probably about $1,000 in margin. So it's going to be doable for a lot of people. But to really trade a lot of contracts and stuff like that, you're probably going to have a lot of money. And so you could have some very sophisticated market makers come into the market because of that. And that means if you're a small guy, you got to keep that in mind, because size is an advantage. That puts you at a disadvantage, and you might have to change your trading strategies based on that. Another thing, and this is the next bullet point on here, but this also means that people that maybe had a lot of control over price in the market today, like miners have a very large role in the Bitcoin market right now. They even have some control or at least influence over the development of Bitcoin itself. And now with all of these other big fish jumping in, those miners may have less control. And then my last point on here, easier to short. So here's the thing. Right now, if I want to short Bitcoin, I'm going to have to open up a margin account on the exchange, or I'm going to have to borrow some Bitcoins so that I can sell it and then buy it back. And those are all sorts of logistical issues with that. And then there's the whole issue of like with Mt. Gox, for instance, if I wanted to short Bitcoin, how do I do that when the freaking exchange goes away? There's those sorts of questions, right? Well, if there's a future, a lot of those risks are taken out. And so for somebody that wants to go short Bitcoin, it's a lot easier with the future. Now, that could mean, I'm not saying this is because, again, I want you to be able to come up to your own conclusions, but that could cause short-term decrease in the price of Bitcoin if traders believe that the price of Bitcoin right now is too high. And it will be easier for them to bring price into line with what is would be considered fair value, right? And it's also important to keep in mind that because of the arbitrage and the nature of futures and that we've explained already, if you want to make a move like that, like you want to move the price of Bitcoin, you're going to do it in the futures probably. So keep in mind, if any of you remember the flash crash was caused in part, according to regulators at least, it was caused in part by very large orders that were going off in the futures. So all of these big orders went off in the futures. The robots freaked out. They pulled all their liquidity, and you had a flash crash. If I was somebody that really wanted to move the price of Bitcoin, I would do it with the future, because if I wanted to do it through the exchange, I would have to have accounts on all of the different exchanges, and the logistics of trying to manipulate the price over all those exchanges and stuff. It's a lot easier to do it with the future. So I think that that's important too. But again, it all comes down to what is the balance of buyers and sellers. So I'll tell you, from my perspective, it seems to me that the CME will bring in a lot of people that want to short Bitcoin. So I do believe that it could bring price down. But again, if you truly believe in Bitcoin, then that's a temporary thing. And overall, in the long run, the effects of a larger market and a more efficient market, it's better for it in the long run. So, you have to make your own conclusions on those. But I hope this was informative. Again, if you have any questions, you can come into the Discord. You can also post all of your comments on this video. I'll try and answer any of the questions that are in here. If you want to call me a globalist shill, that would be great. I love those kind of cognitive dissonance, I hate you kind of comments. I'll argue with you in the comments. I love to argue, so please don't be shy. I hope this was informative, and to see you later.